Have you ever seen the news flash with headlines about a global crisis and watched the stock market tumble in real time? It feels like chaos, a massive, unpredictable force. But what if I told you that a lot of that chaos isn't just about the event itself, but about a predictable tug-of-war happening inside millions of human brains? Today on Fun Facts Online, we're unraveling the fascinating psychology of why markets panic during geopolitical crises. When bad news breaks, a conflict, a trade war, a pandemic, our rational, spreadsheet-loving investor brain often gets shoved aside by something much older and more primal. It's all about fear and uncertainty. Markets hate not knowing what's next. This uncertainty triggers our fight-or-flight instinct. In finance, that usually means flight to safety. We can actually measure this collective anxiety using something called the VIX, or the market's fear gauge. When Russia invaded Ukraine in 2022, the VIX shot up almost instantly. It's a digital scream of market fear, and this fear is contagious. We see others selling, and we get scared. This is called herd behavior. In a world of 24-hour news and social media, this panic can spread like wildfire. But there's more going on beneath the surface. Psychologists like Nobel laureates Daniel Kahneman and Amos Tversky discovered hidden mental shortcuts or cognitive biases that steer our decisions. One of the most powerful is loss aversion. The pain of losing $100 feels twice as bad as the joy of gaining $100. So when the market dips, our brain screams, "Sell now, stop the pain," even if it's the worst long-term move. Then there's the availability heuristic. The more we see dramatic, scary news about a crisis, the bigger and more threatening it seems, crowding out all other information. As Kahneman said, "Nothing in life is as important as you think it is, while you are thinking about it." We also fall for confirmation bias, seeking out news that confirms our fears, and recency bias, believing that a recent market drop will just keep on going forever. Let's look at some examples. Remember the Brexit shock in 2016? The surprise vote to leave the EU triggered a classic fear-based sell-off. The Dow plunged, but the S&P 500 recovered all its losses in just 10 trading days. The initial shock gave way to analysis. The COVID-19 pandemic in 2020 was even more dramatic. It caused the fastest bear market in history, fueled by pure uncertainty and fear. But then, an interesting thing happened. As markets started a rapid recovery, fear of missing out, or FOMO, kicked in, and people who sold in a panic rushed back in, driven by the same herd instinct, just in the opposite direction. This brings us to a crucial point. While the immediate shock is scary, history offers a powerful counter-narrative. Markets are incredibly resilient in the long run. An analysis of major geopolitical events since the 1940s found that a year after a crisis, market returns are typically normal. Believe it or not, from the start of World War II in 1939 to its end in 1945, the Dow Jones actually went up by 50% in total. After the 9/11 attacks, the market recovered in just 15 days. Why? Because while these events are tragic and disruptive, they rarely change the fundamental, long-term drivers of the economy, like innovation and growth. So how do we navigate this psychological maze? First, embrace a long-term perspective. The more you check your portfolio, the more you'll feel the pain of short-term dips. Second, diversify. Spreading your investments around isn't just a financial strategy, it's a behavioral one. It cushions the blow and helps you stay calm. Third, have a plan. Systematically rebalancing your portfolio forces you to buy low and sell high, the exact opposite of what your panicked brain wants to do. And finally, know yourself and question the narrative. Before you make a move during a crisis, ask, am I reacting to a scary headline or am I sticking to my plan? Geopolitical crises are a fact of life. We can't avoid them. But by understanding the psychology of fear, we can refuse to let it be the one making our decisions. The goal isn't to avoid fear, but to understand it and act anyway.